Greetings, Dan Bird here with the Daily Scan for August 20th. I did not do a midday update today, so I'm doing an aftermarket update. And notice the little image there. If I had a hammer, I bet you can all guess what I'm going to talk about today. So, as always, I'm not a financial advisor, so this is for educational purposes only. But we are going to talk about hammers, lots of hammers today. Let's take a look at the 10-minute chart, see what happened with the market today. And pretty interesting day, actually, after a big sell-off yesterday. Is it over? That's the big question. Is it over? So there is the sell-off from yesterday continuing this morning. And then at 11 o'clock this morning, I'm kind of glad I didn't do the midday, because the midday I probably would have been right around here. So now we're up here. So it looks like a recovery. Looks like could that be the bottom? Is that it? Is that all there is to this sell-off? Is that buy the frickin' dip right there? I think that's what a lot of people are thinking, especially retail traders. They're saying, well, we had a big sell-off, so now it's time to jump in, buy the dip. We shall see. I am not convinced, but looks pretty good the second half of the day so far. Now, it didn't even make it back to the open, by the way. But it did go below last Monday's and came back above last Monday's open, just barely, though. So we'll see what happens tomorrow. Let's see what the rotation looks like. You notice money flow came back in a little bit also today. Technology sold off. Wasn't really convincing. This is basically flat all day long. You can see where it's gone for the last week. Financials is the one doing the best. Financials and industrials are the two best sectors, actually. Discretionary selling off, communication services is pretty much flat. Those are the aggressive sectors. The defensive sectors they all started off higher. So that's typically what you see in rotation when large traders, when Wall Street is counting on the retail traders to keep buying as they sell the aggressive growth areas and start buying the defensive areas. Now, it's good that they're doing that. It would be really bad if everything was down, because that means they're just leaving the market. They're moving to cash, and they don't believe anything is going to be any good. But in this case, it looks like they're all moving to defensive areas: staples, healthcare, energy, utilities, materials. Those flattened out near the end of the day when the market started going higher, but still looks like rotation to me. Here's the rotation intermarket relationship charts, growth versus value. You can see it's been just steadily going down, flattened out in the afternoon, but the flattening in the afternoon was not, really didn't increase the same way that the market did. So that, again, tells you that they're not really moving to growth areas. They're moving to value areas as the market's going up. Discretionary versus staples, technology, pretty much flat. Semiconductors started to come back up. Of course, NVIDIA reports on the 28th. So that's next week. And then internet, all of these were down, and it's kind of flat right there. All right, let's look at the Russell 2000 also started to come back, but it did not get back to the open, did not make it back to Monday's open. So that's not good. And these are the growth versus value down here. You can see large, mid, and small caps all were selling off from all the way back here last week. Just all week long, the large caps were rotating from growth to value. The mid and small caps started to move up, and then they sold off until this morning. They started to come back a little bit, but not with a lot of conviction, frankly. So we'll see. Tomorrow's going to be interesting. And then, of course, the Fed on Friday morning. The trend actually is in positive territory again. So that's right here is where it crossed over into the green area, and that's when the market started moving up. However, up volume minus down volume is not really very convincing. Had a little bit of a peak right here in this 2:30 to 4 o'clock period, but then right at the end, turned around and started to go down again. Advancers minus decliners, they've been steadily going down. They were trying to move up, a little bit more advancers than decliners, but again, there's not much conviction there. So even with that nice rally in the second half of today, with the buy the dippers out there buying the dip as they think they should do, I am not convinced. We shall see what happens. All right, let's take a look at the dashboard real quick first. Equities pretty much flat on the day. S&P slightly below the open. NASDAQ 100 also below the open. The VIX spiked above 17 in the morning. You can see right here, went above 17 in the morning and then pulled back again. So we started to see some volatility, but the volatility sort of dissipated. Bonds, 10-year down slightly, but not by much. 20-year up slightly. Dollar pretty much flat. Commodities, gold up a little bit, up 1% today. Silver, which actually had been going down, you can see yesterday's over here. So silver got a bid, starting to move up. Oil moving up a little bit as well. And then crypto, of course, Bitcoin moving higher from basically from the open this morning, but really choppy, up and down, and finally ended the day higher. Ethereum up big time. So Ethereum was a big winner out of these two. Ethereum had been lagging the last week behind Bitcoin, but now you can see up 6.5% today versus Bitcoin's 1.25%. So Ethereum looks like it's the better one for today. Sectors, energy, staples, healthcare, all defensive sectors at the top. At the bottom, all three aggressive sectors. Pretty much what I showed you before in those 10-minute charts. That kind of gives you a sense for what happened today. So we've got the aggressive sectors at the bottom. That is clearly rotation out of aggressive and into defensive. The breadth advancers and decliners are pretty much split over here. These are the earnings calendar of the past 2 days. Let's see, Lowe's reported. Looks like they had a good report and a black candle, so they sold off most of the day. Target, there's a retail. You can see the candle is way down on the lower right-hand side with big volume. So they missed, it looks like. TJ Maxx, looks like they had a good report, a black candle also, so they sold off most of the day. Home Depot, same thing, started higher, sold off almost a engulfing candle right there. Jack Henry started to move higher, but they've had quite a big sell-off. Medtronic sold off yesterday, came back today, so that would have been a good time to get in on Medtronic. It was one that you liked. And let's see which industry groups: drug retailers, medical supplies. So drug retailers actually are in the staples, and medical supplies in healthcare, mining, gold mining, tobacco, reinsurance, apparel, food retailers. These are all defensive areas, even though some of them are in aggressive sectors, like apparel is in the discretionary sector, but they are primarily defensive industry groups that are at the top right now. And this is the top 10 list over here. NEG started to come back again. This one has had a monster run. You can see there $20 2 months ago. Went all the way up to 120, actually even higher, 130. That was a monster run. This has been on the top 10 list. So it pays to pay attention to that list. I'll show you where it is in a minute. Second level, American Sports, not too much. Calmine Foods for eggs. Let's see what the losers are. NVAX, big loser. Soundhound, which is a short squeeze stock. Z-Lab, Qubits, it's a quantum computing stock. What else? Fubo heading down. Reddit, there's a hammer. Look at the hammer. Symbotic, that is not a hammer, but it is a spinning top. And Dell continues to go down. All right, let's take a look at the hammers. If I had a hammer. So to do this, I'm going to stay here. I'm going to go to the scans area. And you can see I've already got it teed up right here. So this is my daily scan candles hammer. So this is going to search for everything that has a hammer. It actually searches for more than just a hammer, but it'll return primarily hammers. So let's run this and let's look at the first one. There's a hammer right there. Clearly, you can see that that looks like a hammer right there. Now, hammers in technical analysis are best when the stock or the index has been selling off. They can be reversal patterns or reversal candles when there's been quite a long downtrend. There hasn't really been a long downtrend in this case. In fact, it just basically just went below the 21. So yes, it's a hammer. So let's think about what that means. What it means is that the market opened up here. It sold off in the morning, just like I showed you before. And then all afternoon, all of the sellers came in, all of the buy the dip people. So this is way too much of a sell-off for this market, which it's not. It's not even down to the low that we had over here, which was August 1st. So we're at August 20th. So basically 3 weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 2.5 trading weeks. Not even made it to the low from August 1st. So of course, everybody thinks that this is a big, huge sell-off because the market, they're used to the market just continuing to go higher. And this might be the end. You can notice back here on August 1st, it pulled back right to the 21. So while it did close below the 21, you can see it better over here. This blow up. While it did close below the 21, it was barely. This time it closed actually a little bit more below the 21. But if you think of what a hammer is, it opened up at the top, it sold all the way off, way down. All of the buy the dippers are saying, that's it. This is a great time to get in. And it actually could be. I'm not saying this is going to continue to go down. This actually could be the reversal. We shall see. Look at the volume down here. Big volume yesterday on that big sell-off. Big volume today, but the second half of that was mostly buying volume. All right, so let's look at the hammers. If I had a hammer, so there's the NASDAQ 100. I'll just step through each of these. There's a hammer. That's the S&P 100. There's the S&P 500. There's a hammer. There's a hammer. There's a hammer. There's a hammer. Semiconductors, heavy construction. There's a hammer. Semiconductors, applied materials. There's a hammer. By the way, there's a shooting star and then a hammer. The hammer lower than the shooting star. There's a hammer. Look at there. There's a hammer. AppLovin. There's a hammer. Broadcom. That's on our Magnificent 7 trend following list. Celestica. Big, huge uptrend. There's a hammer. That's actually a white hammer. So that means it ended higher than the open. Capital One's got a hammer. Evercore, FSS, Interactive Brokers. You get the idea. Hammers everywhere. Lending Club, Marvell, MicroStrategy, Micron got a hammer. Cloudflare, NVIDIA's got a hammer. Came all the way back. This is definitely a buy the dip. All the buy the dippers were jumping in right here. They've been waiting with it probably feels like months for it to finally pull back to a point where they could buy. Of course, it's only at a point where they could have bought back here on July 22nd. So just 1 month earlier, they could have bought it at that same price. But now they think this is a bargain. So there's NVIDIA, they report next week. Palantir's had a huge downtrend. I talked about Palantir. I said if it's one that you want to get in, then you could buy it at the 21. I said at about 170. You can notice the Y at the bottom of that box that shows you where that crosshair is, that horizontal crosshair. So I said you could buy it at 170. You could buy it at the closing the gap down here at 160, put the third, a third, and then you could put another third in down here at the 50-day at about 150. If you had done that, you would be fully invested in Palantir right now at an average price of about 160. And it ended the day at 156. So, which is also the high of the day, or pretty close to it. And it's a hammer. Look at that. It's a hammer right above the 50-day. So is that going to reverse tomorrow and start to move back up? We'll find out. Who knows? Powell, there's a hammer. Q's, there's a hammer. Rambus, hammer. Semiconductors has a hammer. Semtech has a hammer. Spider has a hammer. TEL has a hammer. Taiwan Semiconductor. Upstart has a hammer. Vertiv, it's just hard to pick the one you want to buy. There's Vistra Energy has a hammer. Again, went all the way down here, pretty much the same. There's a hammer right there. So there's what hammers look like. There's a hammer, and then it went up. Very next day had a shooting star, went down from there, but ended higher. So is this gonna happen again? Could be. It might happen again. We shall see. Here's a hammer back here, and it went up. So we'll see what happens. Vistra Energy, Western Digital. There's a hammer, but basically that didn't even hardly get below the 21 right there. Came all the way back to the open. Woodward Governor, same thing. XLC Communication Services. Remember, this was at the bottom of the sector list today, but has a hammer. There's technology. This was at the bottom of the sector list today, but it has a hammer. By the way, look at the 5 getting ready to cross the 21. So that is the short-term down signal when that happens. It probably is going to happen no matter what. Unless this zooms a lot higher, it causes this to actually reverse right at the 21. If this just goes sideways or doesn't move much at all tomorrow, then the short-term signal will probably trigger on XLK right there. So, but right now, guess what? It's a hammer. And here's Block. I think that's the last one. Block has a hammer. So hammers everywhere. We shall see tomorrow if anything comes from that. One thing I want to point out is there is a short squeeze. This is Microbot Medical Biotechnology, MBOT. Got a short squeeze today. Let's go take a look at the short squeeze list and see what percentage is short. Oops. That's not what I wanted. Chart list. Every week I update this. This list changes every week. So on the weekend, I update this list and you can download it. Here's the short squeeze list. So let's find MBOT down here. Microbot Medical. Let me do this as an edit. MBOT right here, 20.8, 20.8. Not a big short squeeze, but almost 21% of the float is short on that. Sorry, something in my throat here tonight. If you want to get the short squeeze list, chart list and scans page, every week I update this. It changes every week because whenever short squeezes happen, then the percentage of the float short goes down, so it's no longer on the list. But this week there were 61, last week there were 63, and it's a CSV file, so you can download it into your own platform if you are a subscriber to the website. By the way, for subscribers, on Saturday I'm doing a Zoom call open to anyone that is subscribing, including monthly subscribers. You can just go right here on Saturday at 1 p.m. Eastern time. Just click on this and it will take you to the button to dial into the Zoom call right there, 1 p.m. on Saturday. So if anybody's interested, it's just an open mic, basically open session. We talk about anything you want to talk about. I'll go as long as people want to talk and as long as my voice holds out. There's one other stock that somebody had mentioned, and that is LTRX. Now, this is a situation where if there's a particular company that you really like and you're watching that company and you keep an eye on the chart every day, then you could actually do really well. But you have to really get to know the company and get to know the chart and how it trades. You can see a big, huge downtrend. So it started up here. If you get in back here at 450, you would have rode it all the way down to $2. So that would have been painful. But if you believed in the company and you wait for the 21 to cross the 50 and bought right here, that was a high of 236. It closed at 234. And 3 days ago, it had a high of 358. So $1.30 would have been the gain in about 3 months. That's pretty good. That's a 50%. Actually, it's 234 back here. 234. Yeah, about 50% gain. 2 days of selling off, but it's still above the 21 and it still looks pretty healthy. So again, I don't know what the company does. If this is one of my subscribers that's following this and sends me a note every so often and let me know that it's starting to move. This is kind of too low of a stock for me usually, but everyone can do their own thing. That short squeeze MBOT was only $3.22. So that's pretty much in the same ballpark as this one. So you could pick or do both of them if you want. But he just pointed this out. It's above all of its moving averages. So it looks pretty healthy, actually. Let's look at it on the new trend meter. So the trend meter shows that it is in a weak uptrend right now. Actually went down into a weak downtrend right here. But it is above all the key moving averages and above the exit, which is that dashed line right there. That's what you can use. I covered this in Technical Tuesday. That's what you can use. It's called a chandelier exit. That's what you can use to set your stops. And it's above all of those right now. So looks pretty good. See how it works out. Last thing, let's just step through the Magnificent Seven stocks. Just see what they look like. See if there's some hammers in here. We'll start with Google. This is not going to show you a hammer as well because it's using the impulse bars, but red bar that actually would be a hammer. Red bar didn't close below the 21. That's good. Amazon did close below the 21. Apple starting to come down. It closes near the low of its day. Meta closed at the high of its day. That is a hammer for Meta. Below the 21, however. Here's Microsoft. Microsoft has not been looking too good lately, and that one actually is. You can look at it this way, and you'll see down here. That's just a solid candle right there. NVIDIA, that is a hammer. If I look at it with my number 2, you can see the hammer down here. I showed this before, but below the 21. So keep that in mind. Tesla. Red bar on Tesla. Netflix, got a blue bar. That's a hammer on Netflix. But nothing else really looks that great. It's below the 50-day right now. Broadcom, I showed before, that is also a hammer. It's a red bar below the 21. So even though these have hammers, they're all below the 21. Costco is actually the best looking one of this group. Costco has a green bar and it just keeps heading higher. It actually got both a short-term and a long-term. Interestingly, I noticed this earlier. Look at it over here. So the medium-term signal is when the 21 moving average crosses above the 50. So it got that today, got a medium-term up signal. But it also got a long-term down signal. That's where the 50 crosses below the 200. That also happened today. So it was a really bifurcated signals today. Pretty interesting on Costco. I'll show you that in a second. Here's Palantir. Palantir looks really weak, actually. So it got a short-term down signal. It's not only below the 21. It closed below the 21 yesterday. It's way below the 21. And it's just barely trying to hang on to the 50 right now. So it really needs to do that. If it can't hang on to the 50, then it's going to be in big trouble. There's a hammer on Arista Networks. And Eli Lilly has actually been looking pretty good lately. It's got 4 green bars. It's still not above its 21, so it's got a lot of work to do. By the way, back here on the charts page, if you look at this little box right here, These are the sectors, but down on the lower left, you have the Magnificent Seven. And here's what I was talking about on Costco. Costco got a medium-term up signal and a long-term down signal on the same day. Both of these happened today. So that was pretty interesting. We'll see what happens tomorrow, which one of these is going to win out. And then, of course, we've got Powell on Friday morning, and that is going to move the market one way or the other. We'll see what he says. I suspect he's going to be talking dovish because he knows he'll be replaced soon. I mean, that could make him talk hawkish because he knows he's going to be replaced soon. But it's a crapshoot on Friday, so we'll see. So good luck trading. Let me know if there's anything you'd like me to look at. Be happy to do that. Incidentally, one person on the site yesterday talked about having the RSI and the Williams percent R, both of those on their chart. And one thing that I cover, and I've covered it in Technical Tuesdays in the past, is you want to try not to have indicators that pretty much do the same thing, because they're going to pretty much give you the same signals. They might be delayed by a day or two, but you want to try to find indicators that give you different types of signals. So they use different math, for instance. So I use the ADX down here, the green and the red lines, and I use the MACD or the PPO up here. On this chart, I use the RSI and the money flow. I like to use those together. So actually, RSI and money flow are up here. The reason I put these together, even though they are similar, the money flow is basically the RSI with volume. So it just adds volume to the RSI. So it just gives me a little bit better validity. So you can see here on this one, let's look at IBM because it's moved a lot. So IBM, you can see the RSI is just coming up above 30 and the money flow is still not above 45. So I like to put those two together because RSI and money flow actually, they're kind of the same, but money flow adds volume. But I have a chart in here called Oscillators. And what I would encourage you to do if you're not sure which ones to use, put them both side by side on your chart and see if there's any real difference between the two. So in this particular case, I have, I'm going to move the Williams up under the RSI. Like that. All right, so here's RSI right here. And here's the Williams percent R right here. They look pretty much similar, don't they? I mean, there are some differences, and Williams goes above is between 80 and 20, whereas RSI is between 70 and 30. So it's a little bit different, but it's pretty similar. So you could use one or the other, and I'm not suggesting you should use either one. I'm just saying don't use them both. Doesn't really make sense to use them both. Here's the money flow down here, which is basically the RSI with volume. Down here, CCI, this is commodity channel index, interestingly looks very similar to Williams percent R. So if you use the commodity channel index instead, again, use one or the other. That looks very similar to Williams percent R. So all of these are oscillators. And this one up here, of course, is the MACD. One reason that I like to put them together like this, because one thing oscillators do well for you is identify negative divergences. And that's really one of the main reasons I like to use oscillators like the RSI and the money flow. So if you'll notice, especially with money flow, as the market was going higher right there, money flow was going lower. RSI was kind of flat, actually slightly up during that period. Williams percent R, you can't really see any divergences. That's pretty much flat through this up period. So divergence means one's going up and one's going down. So you don't want one going up and the other one going up. That's not a divergence. So Williams was basically flat, and the CCI down here was basically flat as well. Yes, they all went down later, but they went down the same time the market went down. So the only way divergences help you is when you identify them when they're doing something opposite of what the market is doing. So the MACD has a bearish divergence. Market made a higher high, MACD made a lower high. Market made a higher high, RSI made a slightly higher high, which is what it should do. However, when you add volume to it with the money flow actually made a lower high. So money flow was flowing out even as the market was going up. So as the market's going up, that's why RSI goes up, because it's relative strength of itself going back 14 days. But when you add volume to it, then you start to see that money was actually flowing out as it was going higher. So that's why I like to use oscillators like this, is to identify divergences. You don't always get them, but when you do, they can be very powerful. So my recommendation is don't use multiple oscillators. Use oscillators that work really well for identifying divergences. That's the best way to look at that. All right, just it's kind of off on a tangent. I probably could have done this Technical Tuesday, but it is what it is. So thanks for watching. Let me know if you have any questions or want me to check something out. Be happy to do that. And I will talk to you tomorrow. Tomorrow should be really interesting to see what happens after today if we got follow through. Take care.